Ms. Renu Baid. She's from IIFL Institutional Securities as well. Renu, hi, this is Anisha this side. Wanted to begin by asking you, what's the big disappointment in the numbers, and is a 5% downtick warranted?
Yes, I think the disappointment essentially is on two fronts. First, largely on the margin side, where we were expecting margins to improve sequentially from last quarter, which has come through. But management clearly has suggested that one should readjust the margin expectations for the core business from 11-12% to somewhere close to 10% levels. So I think that is where we will see on a broad basis, analyst and investor expectations have been toned down. So I think that is the primary reason, and margin expected, and for next year also just a 50 bips margin expansion, which would be lower than the initial number that they were targeting for FY23. So that clearly explains or underlines the stress which remains on certain EPC projects where there are cost escalations and differentials when it comes to execution. Second area of disappointment or slight softness was essentially on the execution, where on the backdrop of strong inflows and backlog, there was an expectation that execution could possibly now be in high double digit or high teens. There, the management remained a bit on the back foot and preferred to be conservative with a 12 to 15% kind of guidance on the revenue side. And to that extent, they also highlighted there could be certain events either related to elections or geopolitical, which could create disruptions on execution later half during the year. So I think on the revenue execution, management was conservative, but on the margin side, clearly there is a reset of expectations, which was aligned with the correction in the earnings estimates and hence probably the stock price as well.
On the flip side, there was a beat on that order inflow, at least when it came to the kind of tailwinds as well that they said in the conference call they're going to see from infrastructure creation, etc. It seems like, at least on that front, it has been optimistic. Why then do you think that the street, is reacting this way to L&T? Is it purely margin pressure concerns?
If we look at the order flows, definitely there was a big positive surprise. Despite front-ending of orders in fiscal 23, 4Q managed pretty good inflows. Orders came in from defense, and management comments both on order prospects as well as the overall order pipeline from a medium-term perspective was relatively positive. So I think there were no disappointments on the order inflow or growth visibility. One has to look at the correction in the price in the background of 2 or 3 events. A, market itself overall has been weak. B, from a relative stock price performance also, Larsen over the last couple of months had held up reasonably well. So when the markets are weak, a bit of disappointment or correction in the earnings forecast, stocks tend to correct. But that doesn't mean that the growth fundamentals for good have changed. So I think in the near term, stock may consolidate a bit, given that management was also a bit more cautious. But as we see and proceed towards the rest of the year, I think it should eventually give a comfortable 10 to 15% kind of compounder. And also not just positivity in terms of order flow traction. If we see clearly cash flow collections, working capital improvement has been best in class for Larsen. So to that extent, I think the results for the year was a bit of mixed bag, a bit of caution on the margins and the execution from the management side. Otherwise, at least from the growth visibility perspective and capex investments or infra investments, the commentary and the body language was relatively positive. So that positivity in terms of cycle continues from even L&T in the last quarter as well.
Okay, Renu, thank you so much for joining us today and making sense of what's happening with that stock price. So the fundamentals over long term, medium term are still intact, but in the near term, there might be consolidation on the stock. And that's why Renu expects that there's going to be around 10 to 15% upside. And that's how the stock price will be capped in the very near term.